Hello traders, Gary Wagner with the Gold Forecast here. It is Monday, January the 10th, approximately 11 o'clock here in Honolulu, Hawaii, and this is the Daily Report. Gold currently trading $4 to $5 higher this morning. That change is due predominantly to a weakening U.S. dollar, with gold only providing a negative 30 on the day and the weakening U.S. dollar giving it a plus 460, therefore a net plus of about $4. On today's report, we will continue our discussion on this one long-legged doji and the setup that we see developing, all here on today's daily report. As we spoke about yesterday, as far as I am concerned, it was absolutely critical, to me at least, that we see this market trade and close above this 50% level, and that's right in here at 1372. Reason being is this is a shorter term Fibonacci retracement level coming from about 1314 all the way to that record top up here. And that 50% to me is fairly critical in terms of a retracement because it's giving up pretty much half of the gains. Now, that being said, we have had these series of dojis, but this last doji that we got the other day on Friday, this long-legged doji, as I said, I believe is pretty significant. Historically, I have seen these really long-legged dojis only a couple of times on the bottom, and we are looking for that three-river morning star variation, which we are starting to get. In other words, we do have the market, which has traded in a downtrend. There's no doubt about that. We have seen the market retrace. We do have a longer black candle at this point that is followed by that small star, and we are now seeing this red candle emerge, and it has overtaken the area that we were looking at in terms of the body. So it is actually a double-edged pattern because now it has become what is known as an engulfing bullish. In other words, the body of this candle has completely engulfed the body of that doji that we got the other day. Therefore, I believe that this setup is complete, and I am issuing a buy signal. So, traders, my recommendation is to buy at the market. You should get in around 1375, 1374 in that area, depending on how it trades. You will be able to get in, depending on when you get this report, if you're trading the Forex, either when right before the close or 1 hour later when it opens up in the afternoon session. Once again, I am recommending that we do go in and buy this market. In terms of a stop placement, the only place that stop placement is going to make sense is going to be to put it below the low of this doji here. So in terms of a stop, the low of this doji right now is 1351. My recommendation is going to be to place our stops at 1348 on a protective stop. Again, going long gold at the market. Lastly, I just want to take a quick look at one more chart before we conclude this report, and this is a 180-minute candlestick chart. Each candle represents 3 hours, but I think that here we can see a little bit more clearly this double bottom that we have seemed to form at the 1350 area right in here and here. Again, traders, go long gold, stops 1348. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.